in another blow for homeowners, experts are warning that interest rates will remain at 4.35% after the RBA's crucial meeting tomorrow. This decision will come on the eve of new inflation figures, which the government anticipates will show a glimmer of hope for Aussies across the country. For more, Chairman of Yellow Brick Road, Mark Bouris, joins me now. Good morning to you. Drum roll. What's your pick today?
Well, I don't expect the Reserve Bank to reduce interest rates tomorrow. She's made it pretty clear, the Reserve Bank Governor has made it pretty clear that there won't be any rate reductions this year. Albeit, the inflation rate is actually going in the right direction. It's nowhere near where she wants to see it.
We've got a lot of you banker people take pot luck, don't you? Well, that's probably maybe not the right word, but the Commonwealth Bank saying December this year for a cut, Westpac saying February, NAB saying by May, by the election. So is there any rhyme or reason to the picks?
Well, the rhyme, there's no reason, but the rhyme is they're all saying a rate reduction. That's a good thing.
Yes.
And they're all saying a rate reduction in the next 6 months, but nobody is agreeing on when that starts and/or no one's agreeing how many. The CBA seems to be a bit of an outlier at the moment. So if you look at the money markets as well, which sort of overrides all the banks, the money markets are saying sometime next year for sure. So I would expect, if I took the average of everything, I would expect sometime after the February numbers have come out, say March, I would expect to see rate reductions. And of course, that depends on what goes on overseas, because we import a lot of inflation. So if the US inflation keeps going in the right direction, we're going to be much better off.
Okay, so the US decision to cut by half the other day, does that have any impact on us at all?
I think it'll have some impact in the language that the Reserve Bank Governor uses tomorrow. So her language has been in all decisions this year at least to say we're either going to put rates up or just leave them the way they are. I think she'll stop the conversation about putting rates up, and I'm really looking forward to hearing what she has to say in terms of language. If she starts to soften her language and just start to talk about rates where they are, not considering increasing rates, that's a great sign for us. That's going to be really important.
So is it the government spending that's keeping this up? Is the government spending saving us from going into recession? Did the RBA not go hard enough, fast enough?
Well, the RBA not going hard enough, fast enough is an argument that's been put forward by Warren Hogan for a long time and a few other economists, and they may well be right, but that doesn't matter anymore because that so-called experiment probably didn't work. In terms of government spending, yeah, government spending definitely is keeping inflation what we call stubborn, because there's a lot of money going from government, coming out of our coffers, the money we pay in taxes. A lot of that money is getting put back into the system. So if anything, it's maybe not causing inflation, but it's making inflation remain sticky, which means all mortgage holders are going to have to pay higher interest rates for a much longer period.
Mark Bouris, thank you very much for your time.
You're welcome.